So what do you think about this week?
Well, you know, look, we are now coming into our third week of the new year. Market's been acting, was up, the financials were up about 10-12% in the first 2 weeks of the year, and everything was looking good. But unfortunately on Friday, JP Morgan came out with their results, which were a little light on earnings and revenues, and that sold the market off on Friday. It affected Goldman Sachs, affected the whole banking sector. Whether this is a good buying opportunity or not, it's hard to say. On Friday last week, we also saw a potential downgrade of the S&P on all Euro banks, which caused a bit of a sell-off on Friday morning in New York. But hopefully this week we'll have a little bit of a bounce back.
So what could be the real trigger for your optimism?
Well, I'm not clear whether I'm optimistic. I think long-term, everything is going to be all right, but I think that the looming overhead of potential S&P downgrades of Euro banks is potentially will top out this market. The first 2 weeks of the year, we were sort of flatlining on the higher end of the marketplace, but what happened on Friday could be a sort of a top for the short term.
Do you really think there will be any stable rally before the election?
That's way too. In the way the market is right now, that's way too far to look off. Right now, I think we just have to look at the first quarter. We have to look at the earnings. We have to look at the banking sector. We have to look at the rotation of people, maybe potentially into financial. All the stocks that underperformed last year are now been so far in the first 2 weeks are outperforming the market, and so